On the last trading day, we detected unusual option activity on Kosmos Energy stock, ticker symbol KOS. And so in this video, we will analyze these unusual options to find out if Kosmos Energy has bottomed, because you can see on the last trading day, the stock dropped to a new low. And so without further ado, let's dive into the data as usual to find out what wealthy investors are doing. As we can see here on the options time and sales tape, we have multiple trades happening for these December 16 options at the 4-strike calls. But the most unusual trade we found was these 2.5 strike puts and the 3-strike calls expiring January 17, being traded as part of a strategy. This is a spread, as you can see here. And when we take a look at the historical data on December 16, when this trade was being made, we can see that these January 17 options at the 2.5 strike puts, there was 5,000 contracts being traded. They are clearly opening trades because the open interest is much less at 601. And at the 3-strike calls, we also have 5,000 contracts being traded, and open interest is only 1,500 less. So we know both of these options are new opening trades. And when we take a look at the data today, we can see that these 2.5 strike puts have now increased in the open interest, and also at the 3-strike calls we have an increase in the open interest as well. And so this investor was actually selling the 2.5 strike puts as a cash secured put and then buying the 3-strike calls both to open. And so we can analyze this trade, and we can see here that as the share price goes up, this trade becomes more positive profitable, because this graph here shows the share price of the stock on the x-axis, and on the y-axis shows the profit loss. Note the break-even zero line here, so anything below that is a loss. So note that this trade is hedged, and that is why the blue line is flat all the way to the 2.5 share price, because they sold the 2.5 strike puts, cash secured puts, because they are willing to own 100 shares at this strike price, which means that we can calculate the total trade costs by multiplying it out, $250 per contract. And since there was a total of about 5,000 contracts, we multiply that out and we get a total trade that required $1.2 million. And so when we take a look at the Greeks, we can confirm that this is a bullish long trade because we have a positive delta trade. And because this is a higher risk trade, because we are trading at a new low, we use position sizing and simply just bought the 3-strike calls over here. As you can see, our position also indicated over here. POS stands for position, green means buy. We did not want to spend time developing a better option strategy because most of our time is focused on our trades for members only, which have a higher probability of profit. If you're interested in our membership trades, make sure to go to our website. And so you can see that we are also going long bullish with these single call options at the 3-strike calls. And we use position sizing to manage our risk instead of selling those 2.5 strike puts, which would cost more per trade. We typically also use different strategies to manage our risk. And if you are interested in how we trade to consistently beat the stock market by finding stocks using our data analysis, not simply using scanners or other websites that don't dive deep into the data to find out what wealthy investors are doing exactly, then make sure to go to our website. We'll put a link at the top here. Let us know in the comments below. Do you think Kosmos Energy stock has bottomed, or do you think it will continue to drop down lower? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.